So, what are the motives, reasons behind corporate restructuring? Number one is synergy. So, the example of synergy, or the reason, synergy being the reason behind an M&A deal, is of Tata Steel and Chorus. Unfortunately, in reality, it turned out to be other way around. But when the deal was done, that was the main driver, and that is synergy. Number two, to focus on core competencies. So, a company called Tomco, Tata Oil Mills, which once upon a time was a flagship company in Tata Group. Not only it was a flagship company in Tata Group, it was also a competitor to Hindustan Lever at that time. Tata's decided to sell this company because they realized that the activity of this company was not in line with the core competency of Tata Group, and therefore they sold it to Hindustan Lever. And why did they sell it to Hindustan Lever? Because Hindustan Lever, being the competitor, Tomco had a best value for Hindustan Lever than for anyone else, and that is how this deal was done. Another example is of Greaves and Piaggio. Greaves was a company that was making a three-wheeler called Garuda, and Greaves was a company which was in the business of making engines. And one day they thought that we are making engines in any case. Why not to go for the forward integration and start making three-wheelers? And that's how they set up a plant in Baramati, started producing a three-wheeler called Garuda. Unfortunately, the product was a complete failure, as much as it was becoming a drain on the cash flow of the parent company, that is Greaves. And therefore, what they thought, they realized that before we also closed down, before Greaves also closed down, because of the losses of Garuda, because of the losses of the three-wheeler division, they entered into a joint venture with a company called Piaggio. A joint venture company was floated, and this entity of Baramati was, this division of Baramati was sold to this joint venture between Greaves and Piaggio. As a result of that, Greaves could get rid of a loss-making division, and which otherwise could have become a drag on their own operations. The third motive, which is there in case of the mergers and amalgamations, is the tax shield. So we all are aware that in case if a loss-making company, if a profit-making company merges with a loss-making company, then the losses of the loss-making company can be set off against the profit of the combined entity in future. As a result of that, for some years, this company will get the benefit of paying lower taxes because of the past losses. Now, so many a times, this is the motive. And remember, ultimately, this is creating value because of the merger, you are able to save the taxes. Because you are saving taxes, you are adding to the cash flow. Because you are adding to the cash flow, you got more money in your hand available, and that means you are able to do much more than what you could do otherwise. So, example is ISMT and Indian ESAL and ISMT. Incidentally, recently, ISMT also has been sold to another group in Maharashtra, and that is Kirloskar Group, Kirloskar Ferrous. Leadership position is another driver. So remember, Mittal Steel was a much smaller company than Arcelor, which was a global company. Mittal Steel was also a global company, but Mittal Steel was much smaller than Arcelor. But Mr. Mittal, the owner of Mittal Steel, thought to gain the leadership as far as the steel making was concerned. And this is how he acquired Arcelor, and the combined entity became Arcelor Mittal, and that is to gain the leadership position. The another driver would be product range extension. So Tata Motors, that was never into multi-axle vehicles. So what Tata Motors always wanted to expand their product range is start producing multi-axle vehicles, which they were not. So instead of setting up a new plant for producing multi-axle vehicles, which would mean a lot of investment, fresh investment and gestation period, what they did, they acquired a company called Daewoo. Managerial efficiency. So all the mergers of holding company and subsidiary company, remember the prime driver, the managerial efficiency, and also the most of the mergers that would happen within a group company, which I am sure all of you must be doing also many times, are also the driver is managerial efficiencies. Market entry can be another motive. And remember, market entry is only a means. The main driver is EVA. Because you are entering into a new market, you are able to increase your revenue. Because you are able to increase your revenue, you are able to increase your bottom line. Because you are able to increase your bottom line, ultimately is going to have an impact on your EVA, economic value added. And therefore, please remember and always remember, what I'm discussing with you are only means. They are not drivers. They may appear to be drivers. They are not drivers. They are only means. The driver is economic value added. So market entry can again be a means for achieving this purpose of increasing EVA through M&A. So Tata Tea acquiring Tetley in UK is an example of that. Walmart and Flipkart again is an example of market entry, because Walmart was not there in India and they thought through Flipkart they can do that. Diversification can also, so Reliance acquiring AdLab was an example of diversification. Inorganic growth or network extension is another means for achieving higher EVA. So Kotak acquiring ING Vyas is an example of inorganic growth or an example of inorganic network extension. So Kotak acquired ING Vyas. What is the benefit? The benefit, all the branches of ING Vyas becomes automatically the branches of Kotak Bank in just one day. Piramal Capital Housing Finance recently acquiring Diwan Housing is another example of the same kind. A government disinvestment is another means. So, and that's where you have VSNL going to Tata Communication, and Walco to Sterlite of Anil Agrawal, and there are so many examples of government disinvestments happening through M&A. Market orientation, and I'm sure all of you would know this very well. There used to be a thing called ICSI Limited. ICSI Limited subsequently promoted ICICI Bank, and subsequently the parent company, which is ICICI Limited, got merged into ICICI Bank because they realized better synergies in, instead of having two different entities which are having similar kind of business activities, why not to have one single entity? And that is how about 15 years back ICICI Limited, which is the parent company, got merged into ICICI Bank. Similar thing is going to be repeated, as all of you would be knowing in any case. SDFC Bank and SDFC now merging together. It has already been announced, and I'm sure all of you would know. And interestingly, the day the announcement was made, both the SDFC and SDFC Bank shot up by 16 to 20% the market price of these shares. Of course, subsequently it came down because a lot of people, when they analyzed the intricacies of this merger, they found that this merger may not really be creating value. And since this merger may not be creating value, it is not beneficial for the shareholders of these two mergers happening. And that is how, internally, these two banks now are currently working on a lot of things because there are a lot of loose ends which they are trying to tie up, so that when the merger finally happens, it should not turn out to be not a value creator. It should turn out to be a value creator and not a value destroyer. So this is again a result of market orientation. Strategic alliance. So I'm sure Reliance Facebook is an example of strategic alliance, because Reliance would like to take the benefit of the technology available through the Facebook. And same is the case with Reliance inviting the Saudi Arabia to buy 10% stake in Reliance, and that's how have a strategic association. But finally, of course, it appears that this deal finally has not come through, but that's how it was planned to be. Global reach, and I'm sure again all of you would be aware that there's a company called Revlon, which is a global brand as far as the cosmetics are concerned. Unfortunately, this company is already on the verge of bankruptcy, and Reliance has made a bid to acquire this company, and I'm sure you can understand as to how this is going to benefit to Reliance when in terms of the global reach. The means for achieving value creation can also be bailout, when Reliance Communication and Geo coming together. Consequences of IBC. So I'm sure all of you once again be aware, Tata Steel acquired a company called Bhushan Steel, and now Bhushan Steel is merged into Tata Steel. SR Steel, as I have explained to you, is becoming part of ArcelorMittal, and Ruchi Soya becoming now part of Patanjali Group. The means for achieving M&A can also be market compulsion. So Idea and Vodafone, please remember, as I said a little while ago, was not a matter of choice. It was because of because of market compulsions. Because if both these companies, if they would have continued to stand separately, perhaps both these companies would have closed by now. Together, at least they are able to sustain, survive, and keep on operating. Sahara into Jet Airways, Universal Luggage by Bloplast, Tomco by HUL, as I said a little while ago, Hyderabad Alvin by Voltas, Sony and Z. Now, these are all examples of market compulsion. So, please remember the means, the form can be anything, as I have just explained to you. But the real driver in case of any M&A deal is value creation, is maximization of EVA, economic value created. Economic value created. Now let me give you another question, and that is M&A possible without valuation? This question again is open to all of you. Let me hear from you as to what do you think, is it possible or is not possible?